morning, good morning. How's everyone doing today? Thanks for joining me again for another incredible session. We've been just on fire lately, haven't we? The analysis has been just spot on. The forecasts have been spot on. Just been dead accurate. Dead accurate. Well, when you spend so much time, tracking the institutions, looking at their positions, studying what they do, how they do it, you put a lot of time and effort into doing that type of work, then you'll find that you can be accurate because you're looking at what you need to be looking at. So welcome. Thanks for joining me again for another day. We're going to be taking a look at the markets today. We're going to be taking a look at what is the potential trade ideas that we got for September, because I think September is going to be full of a lot of good potential for trades. Okay, we've been waiting quite some time for some things to be setting up, and we've seen that happen. We've seen the setups take place, and now we're getting momentum coming into the markets, which is exactly what we've been waiting for. So this is all really, really good. So let's hit the like button. Let's try to get it up to at least 30. We got 30 of you here with us right now. So if we can get up to 30, that'd be good. And if you're new to the channel, make sure you subscribe so you get alerted when we do these live broadcasts. A lot of times moves happen. We take trades and people say, oh, how did you alert that? Well, we've discussed it in the live videos. So you just got to make sure you subscribe, make sure you get the alerts, and that way you won't miss any of the live sessions. And if you do miss the live session, at least you'll be given the notification that we had a live session, and then you can go back and rewatch it. Okay, but last week we talked about the pound breaking up to the upside. Okay, and remember what we were saying, that many times the banks will focus on some pairs, okay, a handful of pairs, and then they will later on shift their focus onto other pairs, but move them in the same direction. Okay, you remember we were talking about that? And what was the pairs that we were talking about? We were seeing a lot of movement in the euro. We saw a lot of movement in the Aussie. Those ones the institutions were focusing their attention on. Okay, but when you looked at the pound, it wasn't moving at all. It was just sitting sideways. And what did I say? The banks are not focusing on this pair right now. But once they stop their focus, once they shift their focus off of the euro, once the euro and the Aussie has made its move, then they will shift their focus onto another pair. And pound will be that pair, as well as a couple other ones, but we were focusing primarily on the pound. And at that time, the pound was down here, in this area. Okay? Look at the move that we ended up getting. So this is what I was talking about. That was a totally predictable move, forecasted before it even took place. I explained the reason why it was going to happen. All right? And it did exactly as we had suggested it would. All right. So, spot on, you would say. That's great. Good. How is everyone? Nice to see all these faces here with us. Okay, so what are we going to be focused on? So we did some analysis in a level 3 session at the school. And level 3 is where we are dealing with a lot more in-depth analysis. Okay, so I know there's a lot of new faces in here, so I'll give you a really quick overview of what it is that we're doing at the school. Okay, so we have a level 1, we have a level 2, and we have a level 3 of education. Okay, now level 1, you become a student. What you're learning is you're learning the key supply and demand concepts and principles. Okay, and so you may have looked around the internet, and now you can see that there is a dime a dozen people trying to teach supply and demand. But let me tell you, supply and demand is an incredible skill that requires a really deep understanding of how institutions move price from one area to another area. I have spent many years only focused on extracting information from the markets and relating it to how the institutions move price on the markets. Okay, so over many years I've been collecting information about the markets and creating concepts and principles that we can apply to any market with candlesticks to be able to determine exactly what the banks are doing with price, why they're doing it, and what is the next step. What is the next phase of price action? So at the very core, we have concepts and principles of supply and demand that we use, that we apply to the charts to be able to determine where the banks are buying, what exact price they started buying, and what exact price the core of that zone, either buying or selling, fit within. Okay, we've narrowed this down to become extremely accurate with how we locate our buying and selling. I mean, you go online, and like I said, there's a dime a dozen people out there saying that they're teaching supply and demand. Okay, take our class. The promotion is $175 for 3 months. Join us for 3 months. Look at what we teach and then go and see what everybody's teaching, and you'll see the difference. Okay, you'll realize that what they're teaching is just a bunch of BS. Okay, in all honesty. So level 1, we're teaching the supply and demand, the core principles and concepts that you need to understand so that when you look at a chart, you know how to apply those concepts and principles onto the chart to locate the supply and demand. Okay, and also trend lines. Okay, now there's 1,000 ways to draw trend lines, but it depends on what you're using those trend lines for. Trend lines, we feel the only reason why we would locate trend lines is so that they can be of incredible use for us. Okay, we don't want to draw a trend line just for the sake of drawing trend line and then think, oh, if price gets down to that trend line, maybe it'll hold, maybe it won't. There's no purpose in drawing a trend line if that's the way you're going to look at it. We're drawing trend lines because we understand that the banks and the algorithms that they use to move the markets, they recognize trend lines and the importance of trend lines, and they realize that retail traders use trend lines all the time. And so if you're going to create chart patterns that are going to lure retail traders into taking the opposite side of your trades, you're going to need to incorporate the use of those trend lines. And the trend lines that the institutions are observing are the same trend lines that retail traders are observing. Okay, but drawing trend lines correctly is extremely powerful. And I'll tell you, nobody draws trend lines correctly. Okay, they simply don't. All right, or their usage of the trend lines are incorrect. All right, it's one of the two. Traders fail in one of the two ways. They're drawing their trend lines incorrectly, or they are drawing them correctly. Every once in a while they'll get them right, but they're using them incorrectly. Okay, so level 1, we teach you how to locate the institutional supply and demand and how to draw the trend lines correctly. All right, just that alone. This is liquid gold. It doesn't matter what trading strategy you trade. If you apply these concepts and principles to your trading, it will change your trading dramatically. Now in level 2, what we get into is structures. Okay, structures such as trends, ranges, okay, price going into consolidation. All these things are important because we want to know when the banks create trends, right? That's important. For us to take advantage of a move in the markets, there needs to be momentum. Momentum is created by the banks, okay? And momentum will be created by the banks when they have finished accumulating or distributing a position that they have, all right? That's how it works. You'll only find short-term momentum in the markets when the banks are in the process of either offloading or accumulating a position. But once they've accumulated a core position, then they're ready to push price into the direction that they want to take price. And that's when you want to really take advantage of big moves in the markets, because you want to be able to determine when they've accumulated their position and when they are ready to break price out of that accumulation phase and push price in the direction that they want to. So in order to do that, you have to understand when they are accumulating a position, when they are distributing a position, and when they create trends. Okay, because believe me, they do create trends. Trends are not just for retail traders. The banks create trends. That's how they push price in the direction that they want to push price in. They create trends. And so you want to participate in the trends that the banks are creating. Not only that, but you want to participate in the trends that the banks are creating, and you want to get out when the trend ends. Okay, so you want to be able to locate where these trends that the banks create, where they're going to end. All right, that's what we do. In level 3, we go into something completely advanced, and that's about understanding the sequences that play out in the market, because we're talking about all different time frames here that we're looking. Okay, we're looking at 4-hour charts, daily charts, okay, weekly charts, monthly charts, and within all those time frames, there's a different story that's playing out. Okay, the banks are controlling price on all those time frames. Right? What they do on the 4-hour chart is to help facilitate what happens on the daily chart. What they do on the daily chart helps to facilitate what they do on the weekly chart, and so on and so on. So if you can follow along with what is taking place on each of the time frames, then all that's required is to know what time frame you need to be focused on and wait for it to produce the movement that you are expecting. And once it does, you know it will lead into the movement that's going to be expected on one time frame higher. And once you know the sequence of events that is expected to play out, then you can participate in that sequence of events and trade alongside without the movement of price throughout those time frames. Okay, so level 3, we're talking about sequences, we're talking about all the different time frames, and we're talking about how the banks move price all throughout those time frames. Okay, it's extremely powerful. It requires a lot of work, but the results speak for themselves. Okay, the results speak for themselves. So when we were looking at the Aussie US dollar chart on the previous Friday in our level 3 session, what we're doing is we're looking at all the time frames and we're looking at what the banks are doing. Okay, now why did we know that price was going to rally up very strong from this area? We knew that because, again, we were looking at all the different time frames, and we had determined that once price came down into this very significant area of demand down here, that they were going to start accumulating a long position again. All right, and we're able to determine this even before we look at the COT report, and the COT report shows us the proof that they are accumulating the position. Okay, many times we're able to spot these moves before that. Okay, so we were able to get in long on the Aussie US dollar even before any signs of buying from the banks even come up. And many times it's a great time to enter into the markets before the banks even do, because you can get in at the best prices, okay, at the lowest prices. And so we knew price was going to go up because when we were doing our multiple time frame analysis, we were following the sequence of events that we were expecting to play out. And the sequence of events was when price came into this area of demand, we expected the banks to continue to start buying from this area, and that's what they did. All right, so now what is happening? let's see what's happening with price. Price is stalling and it's reversing. Why is it doing that? Because they stopped buying. Okay? But on the way up, take a look. This was a roadblock. This was a roadblock. They just destroyed 2 roadblocks. Okay? Imagine traveling down a road and you got a couple roadblocks in front of you. To break through them, you got to go full blast, right? And puncture right through them. And as you puncture through those roadblocks, just imagine some concrete roadblocks in the middle of the road. You're driving down the road, and poof, you hit the first one, poof, you hit the second one. That takes a lot of wind out of your sails, right? That takes a lot of wind out of your sails. And to get that wind back, what do you got to do? You got to fill in with more demand, all right? So where is that demand? Right here. This is the last area that we know for a fact the banks were filling in tons of buying, okay? Now, could they just stop price from dropping all the way down there and come in live time and fill in demand? Sure they could. Would we be able to know that? Not really, no. Could we locate that by looking at lower time frames? Yes, we could. I could drop it down to the 4 hour, to the 1 hour, to the half hour, and look at those charts and look for signs of an accumulation of them buying, because there's always signs, right? Whenever they start doing something, there's going to be signs. You know, it's all about what you are expecting to see, okay, what you are anticipating from the banks, and looking for those signs of it taking place. All right? So, could they just stop price halfway and start moving price up from there? Yes, they could. It's not likely, but they could do that. And we could start looking for signs of that. All right? We could start paying attention and looking for signs of that. But what I can tell you is that, you know, the reason why price stopped here is because they just ran through 2 major roadblocks and they need to refuel. So the momentum has died down in terms of their ability to push price up. So now is not a time that I would want to be buying the Aussie. I'm already in, I'm already situated, and now I'm going to wait for my next opportunity, because now I'm going to be waiting for the banks to show me that they're ready to start accumulating again. And when they start accumulating again, that's when I want to jump in. Okay? So the Aussie is a chart that we like. It is a chart that after doing some extensive analysis on, we see significant upside potential on this chart. And, you know, we see a move like this and possibly even continuing higher like that. Okay? The key is to situate yourself accordingly as price plays out. Once the buying comes in, you know exactly how to get in, where to put your stop loss, okay? How to reduce your risk on your positions, and know when to add to those positions so that you get the biggest upside potential with the smallest risk exposure. So Aussie is one that we like. Again, after doing some significant analysis on these charts, Aussie was a very, very good potential for a move up. Okay, and in the community, in our forum, within the portfolio, I will be laying it all out in detail, where I've gotten in, where I'm moving my stops, what I'm waiting for, how I will enter, how I will manage my trade, all that good stuff. Okay. Now here we have gold. We were looking at gold, and we were mentioning this area of supply here by the banks. Here's an area of supply that the banks created, and what we were talking about was them taking that zone out. All right, there was a lack of move to the downside with respect to gold, and because of what we were seeing with the Aussie, we knew that there was a likelihood of a push up. And remember what we were talking about down here. You remember why this big spike took place? You remember what the banks did? They entered into short positions aggressively to lure retail traders into going short, which they did. Okay, retail traders did get lured into getting in short. And then what did they do? They turned price around and they shot it straight to the upside. And what did I say? I said, you know, they could use this area of supply to facilitate a move down. But I want you to think logically about that. Would they have pushed price down so hard to lure retail traders into going short, only for them to come in and at that supply and go back down to where they were? Not likely, right? Not likely. They're likely going to send it back to the upside. Well, I want you to see something here, because now when you look at the retail positions with respect to gold, look what they're doing. I mean, retail traders took a loss. Okay, they took a very significant loss. We know because we know where they got in. They got in down here. All right, and then all of a sudden now magically they are long. Where are they getting long? Up here, right near the highs. So they got out of their short positions at a loss, and then they were like, okay, maybe at this trend line it's going to go down. Maybe they got in short again. Maybe they lost more. I don't know. I didn't track that. I have one of my students that is tracking the retail positions and what they're doing at all times. This guy is, what he's doing with his work is quite unique, very incredible. I've never seen anybody do it before, and it's quite revealing to in the psychology of retail traders and how they keep on screwing up, and how they keep on falling for the traps constantly. But anyways, now we see that retail traders, they got in long. And I bet you anything it's up here. Why? Because here's the previous highs, and anything that goes past it, they're going to want to go long, right? That's a totally ridiculous strategy. Totally ridiculous strategy. That does not work, okay? That does not work. That's the oldest trick in the book. And look at the spike up here. I mean, look at this spike up here in price. Just by looking at that, I know that what the banks did was they let retail traders go get in long, and now they're shifting price to the downside, right? Okay? And isn't that in line with what we're seeing with the Aussie? What is the Aussie doing? The Aussie's dropping. Why is the Aussie dropping? Because it's running out of buying. So, same thing is happening with this. So what they're going to do is they're going to drop it down, and then guess what they're going to do? What do you think they're going to do? They're likely going to spin it around once retail traders get out of those long positions. Once they think to themselves, oh shoot, we got in the wrong position again. And now they're going to push it down. They're going to revert into going in short, and then the banks will shoot it up. That's how it is. The banks are going to accumulate a position, and they're going to do it without as many traders on their back as possible. Okay, so there is a way to ride the wave, to ride the momentum of the banks without being shaken out. You just have to be patient and know when that time is. Okay. So we go over to oil. Oil is holding quite well. We've talked about this before. It's sitting within some institutional demand down here. And price is in the range on the weekly chart. And that's the chart we have to be focused on. Okay? Remember at the beginning of this session, what I was saying was you have to understand what's happening on each of the time frames and know which time frame you should be focusing your attention on. Well, this is the time frame you should be focusing your attention on right here, this weekly. Because unless it breaks out of the range, you can't make any trading decisions on this chart. Okay? I mean, you can if you want to lose money. Sure, you could do that, but I wouldn't recommend doing that. Okay, so we're watching this chart and we're just waiting for the right moment. And that's just, it comes down to watching this weekly chart. Okay, so this might be a good trading opportunity soon, but it's not quite there yet. So we're going to be leaving this one alone. But I think there's a really good chance that we see some very strong momentum build over time. All right, I would not be purchasing oil now. But once the trade signal is there, once the chart provides us with the signal saying, hey, we don't have to worry now, they've moved on to the next sequence of events that we are expecting to take place, then we can make our move. Okay? Let's take a look at the Euro US dollar. All right, so it's doing the same thing that we were expecting, same thing as with the Aussie. It's pulling back. All right, it's pulling back down towards this area here after the initial move to the upside. So it's heading back down into areas of demand where we could see momentum start to shift back up and start heading higher. Okay, very good chance of that. Now, I am very, very interested in trading this pair. Okay, I'm very interested in trading the euro. It's been taking some time. It's been taking some time to set up, and we know exactly why it's been taking some time to set up. Okay, the reason being is because what is in play here is a monthly chart. All right, and when the monthly chart is in play, it takes 1 month to create each candle. All right. So if an area of buying is created, that means it takes a month or two to create that area. To move away from that area takes a month or two. To pause away from that area, it takes a month or two. To come back to that area takes a month or two. Okay? And then to start accumulating a position, that takes a lot of time. You're talking about multiple months, right? And that's why price has been staying in a range for quite some time, is because the monthly chart is in play. So you have to be very patient with these charts, because if you get in too quickly, like what the retail traders are doing, they're losing money. Okay, like I was mentioning to my students in the last report that we did, I get a lot of times people are saying, oh, how many trading signals are you giving out, or how many trades a week are you doing? You know, it doesn't matter how many trades a week somebody is doing. It doesn't. The more trades you take, it doesn't mean you're going to be making more money. All right. We've been tracking what the retail traders have been doing for quite some time. Okay. Do you see how they're not making money consistently? Okay. There are times that they are making money, but it's very small amounts. Okay. What they're making is very small. They get in and they get out really quickly. Okay. And they take a small profit. The majority of the trades are losers. Okay, they're losers. Right now they're short the euro, and what has the dollar or the euro been doing? Rallying. So I don't know where they're getting in short. Probably at the test of this this trend line here on the daily chart, they were getting in short, likely. But you know, taking lots of trades doesn't equate to making a lot of money. And I always try to reinforce that, because there's this idea that people want to bring in hundreds of dollars every single day. You know, I want to wait until the opportunities are there and the odds are high, and then I want to strike with nice size positions and reducing as much risk as possible, because when you're opening up large positions, you don't want to have big risk. Okay, I don't want to take big losses. I will risk big amounts if there's very big potential and very high odds for the trade to work in my favor. I will do that, and they will pay very well the vast majority of the time. So that's what I want to do. So, you know, in a month, do you want to take 40 trades that, you know, some were winners, some were losers, and you're break even? Or would you rather take one trade or two trades and you make 3, 4, 5, 6, 7% on that trade? You know, which one do you want to do? I prefer to focus most of my attention on analysis, focus most of my attention on the sequences, following what the banks are doing, looking at the signs, looking for the chart signals, and when it's there, I attack. That's what I prefer to do. That's a smart way to trade, in my opinion. And then my brokerage fees are very low. My stress levels are, you know, non-existent. And I just go with the flow, and I only pull the trigger when it's high odds. So euro, I think, is setting up slowly. It'll take some time because we're dealing with the higher time frames. But I do believe that it is setting up for a trade. Pound is one of those that we've been watching for some time. It hasn't got the greatest chart formation. It's mostly being fueled by the other markets. Okay, the way that it's moving is being fueled by the other markets. Quickly, I'll go over to Kiwi dollar. I think this one is also setting up for a nice trade. Okay, we do believe that we are going to be seeing more upside on this chart. The chart formation is not exactly what we would like to engage in, so we are waiting for the appropriate chart signals on this one to engage. Okay. USCAD, also a chart that we are looking at. I am interested in trading this chart. And, if we look at the higher time frame, we got the monthly chart. And this chart may be in play. Okay, I say may be because there is a lot of evidence to suggest that it is in play. But when we look at the dynamic of what is taking place on this chart, there's also evidence to suggest that this chart may be fueled and led by the actual dollar chart, okay, and the rest of the markets. Why am I saying that? Well, is because we've had this push up in price here, and we've had a lot of interaction on the chart here to the downside, and we are not seeing any reasons logically on this chart and on the lower time frame charts to explain this interaction here. And so the only reason that we can conclude on is that the reason why this is doing what it's doing is because it's being led by the other markets. Okay, the movements on the euro, the movements on the Aussie, the movements on the dollar is what's causing this here, as well as oil. Okay, so I am interested in trading this chart. It's just about figuring out, how price is going to move and how to take advantage of the move that we expect to take place while maintaining risk low and making sure that we're getting in at the right spot. So I do believe over time we're going to see price decline like this and eventually head much lower and hit targets that we have much lower on the chart. Okay, but got to be patient. Going to be waiting for the right chart signal and then going to react. Okay, but let's take a look at this daily chart. Okay, if we slip it down to a 1 hour chart, we can see that price is now heading into an area of supply. This is the area of supply here, this big red area. Okay, now I would be interested in getting in short somewhere in these highs. Okay, I would be interested in getting in short. The way I would want to do that is I would wait for some kind of movement where it actually comes into the supply and then shifts momentum from heading upwards like this. Once it breaks out of this channel to the downside, that's what I'd be waiting for. And then any large imbalances to the downside from this area would be the supply area that I would be basing my risk off of. So stop losses would be going above those imbalances, and I would be targeting much lower on the charts. Okay, so when you squeeze this chart up like this, what I'd be watching for is something like this. Okay, and I'd be watching for supply areas, something like that. Okay, pay attention to what I just drew, and then let's see how price plays out. If it does not give you any type of structure like this, I would not be interested in going short. If it does, I'm interested in going short. Okay, and stop losses would be above those areas, those imbalances on the way. Okay, so I gave you a lot there to think about. Okay, I gave you a lot to think about, but I do think that time is going to be important to keep track of. We need to ensure that we don't jump in too early. Understand the time frames that are in play, and once you understand the time frames that are in play, you can understand, how long things should take to play out. Okay, we'll take a quick look at Bitcoin. Did it hit my target yet? Let's see. I think it came pretty darn close. Yeah, it hit my target. How do you like them apples? How do you like them apples? Okay, ladies and gents, how do you like them apples? Okay, the power of supply and demand and the way that we analyze the charts. Price was up here. Okay, that's where price was. And what did we say? Here, let's go back. This is where price was, like this. And here's the tweet that I actually tweeted out. I posted it in here. And it's tracking the actual date that I posted on. Let's see. Where's that line it's supposed to be on the chart? Oh, it's based off the weekly. Yeah. But up here, see, this was May 13. So May 13, March, April, May 13 was still at the highs here. Okay, May 13. And what did I post? Who wants to trade Bitcoin? Not me. No structures on the daily chart to support buying. At this time, this can drop to the 35s. Okay. At this time, this can drop to the 35s. Okay. And so that was up here. And before price even declined, what I was saying was I was having a conversation with my friend, and my friend was buying Bitcoin at the highs. Okay, up here, 55s, give or take around that area. And he goes, you should get involved in Bitcoin too. And I said, no, sir, I would not. Oh, why not? Well, because it's too high. Price just rallied up there. The banks bought lower. Oh, how can you tell? Well, that's what I do for a living, is I spot where the banks are buying and selling. Okay, so where would you buy it? I said, I'd buy it in the 33s, 35 areas. Oh, yeah? Yeah, I would buy it there. But then my targets would be around the 52 area. Oh, it's never going to drop to the 33s. It's never going to drop down there to the 33s, 34s, 35s. It'll never. This thing is going to rally up to the 100Ks. I said, no, don't be so sure. This is how supply and demand works. This is how the institutions accumulate positions and distribute positions. This is just how the markets work. You're asking me for my opinion, and I'm telling you. No, it'll never drop down there. Well, before it even dropped down there, I said if I was to trade this chart and this Bitcoin, I would buy it at 35,000 and I would sell it at 52K. All right? What did price do? Dropped down to 35 and rallied and hit my target of 52. Completely predicted. Okay? It was predicted in April and May of this year. It's September and it just hit my target. Okay? Beginning of the year I predicted it, and just now in September it finally hit the target. All right? So can you use supply and demand for trading Bitcoin, trading other markets? Yes, you can. Can you use it to predict the moves in the markets? 6 months in advance, 7 months, 8 months in advance? Yes, you can. When you know what you're doing, you can do this, right? And I did it. Okay? There's the proof. In fact, when price was down here at the lows, I posted something important that I wanted people to read. Morning traders, this was May 27th. Okay? Right down on the lows. I said, did you see the news now reporting that Carl Icahn is interested in buying Bitcoin? If it's true or not, I don't know. But the interesting thing is this comes out when price is reacting to institutional demand. Institutional demand. So, many have already lost. So many already have lost on their long positions. Yeah, they did. Because they got in long at the highs. And they're not waiting patiently to get in long at the lows. So if you would have waited patiently and not bought in the 55s and only bought in the 35s, you'd be making a great profit right now. Okay? You'd be bringing in the cash too. You'd be bringing in the profits on this. This was an excellent trade. Almost double your money right there. Okay? With your investment. Okay? Almost double the move. So this worked out extremely well, and it just shows you why it's so important to understand what the banks are doing, how the banks move price on the charts. If you don't know how to do that, if you don't understand those things, you are going to be in trouble. Period. So you have to learn those things, okay? Yeah, there it is. So this first message was right here, and this message was when price was around here. Okay, so I think that's I think I gave you a lot to work with, I think, right? What do you guys think? I gave you a lot to think about. Okay? Those are the things that I want you guys to focus on throughout the week, and just make note of what I was showing you on the charts, and then watch to see how the markets play out. Look and see what they do. All right? Never take anybody's word for it. Okay? If you're going to try to figure out if something works or not. If you're new here and you're just trying to see if this analysis is for you, if it's accurate or not, don't take my word for it. Just pay attention to what we say, what we see, what we're observing, why we're observing it, what are the time frames we're looking at, how long things should be for them to play out. Just pay attention to those things, and then wait and see how the market plays out. And then you'll see for yourself what it is that we're doing. But those that have been here for a long time, they understand what we're doing, they understand why we do it, and they understand the accuracy of the system and the value that we offer. So again, make sure you like and subscribe. I would appreciate if you did that. And again, subscribe so that you don't miss out on any of the future sessions that we do. Okay? So that is about it, ladies and gents. I hope you enjoyed your session today with me, and hope you will enjoy the rest of your day as well. Okay, so I'll leave you there. Enjoy, have a great day, and